And here we go. This is Travis Witherspoon. Thank you for joining on to the webinar. What we're going to end up talking about is Forex trade rankings. I'm very excited to be able to talk about some of the topics that I'm going to end up talking about today. It's something that I have really been trying to make sure that I end up placing in and sending out to everyone, because this is one of the fundamental things that we actually end up doing as a company to be able to simplify Forex trading. But we want to make sure that we end up having this video be set up to where you can be able to have a great experience and being able to understand what we end up doing by simplifying our Forex trading into 5 Forex points, especially when it comes down to our Fibonacci Fundamentals Master Class. So with that being said, sit back, take some notes. I'm going to end up asking you some questions. If you're reading this from a pre-recorded video, take the time to be able to pause, especially on the questions. Make sure that you end up writing down the notes, and then after that, once we get to the end, you'll truly be able to understand exactly what we're being able to do. So before we end up getting started, I'm going to go ahead and go through the disclaimer. I am not a CPA, which means that I do not tell people whether to buy or sell. We end up teaching education, and with that education, we try to be able to get people to be able to start off and being able to learn the right way, and then after that be able to rock the market out based off our education. So all of the results that we end up having are basically hypothetical or simulated or something that we've ended up doing in the past. But understand this, previous results are not indicative of future performance. So understand that there's risk that goes involved with everything, and what we're trying to do is make sure that you end up minimizing your risk. So my name is Travis Witherspoon. I am the CEO of Carter Cow Capital Incorporated. I'm the creator of Pathfinder Auto, the Precision Entry Point Trader System, our Fibonacci Fundamentals Master Class, and a lot of other systems that we have going on this year. And like I ended up saying earlier, I am a Forex trading specialist, which means that what I end up doing is help clients that are new, or people that are looking for that slight little edge, be able to mentor them, being able to teach them our system for trading, for our automated systems and our manual systems, and be able to help them thrive throughout the market so they can have the best possible chance of being able to be profitable. So this is a part of our passive income series, being able to generate passive income within 90 minutes or less. And what we're going to end up doing from here is basically talking about how we basically end up looking at our trade ranking system and being able to get you the best possible positions within your trading career. So I'm going to ask you this question. We're going to start off in general, and I always start off with a talking point. Here's my talking point. Here's my question. What are your financial goals? Now, I'm going to pause for a second so you can be able to write that down, but I want you to understand this. My goals and your goals and somebody else's goals are totally different. So on a sheet of paper, I want you to write down, what are your financial goals? Okay, so understand this. There's a lot of stuff that's going on outside outside in the world and everything else like that. You got the coronavirus that's going on. That's really putting people in a lot of situations where they can't work, they can't survive, especially if you're working actively. That means that you're trading time for money. Well, if you're not able to work, then how are you going to be able to achieve your financial goals, right? So what we're doing in this video, what we're doing as a company, is being able to find ways for people to be able to create passive income. Now, our presentation is going to focus in on these few areas. We're going to talk about the goal of trading. We're going to talk about risk versus reward. We're going to go through the ABCDs of trading. We're going to talk about Fibonacci ratios. We're going to talk about trade rankings. We're going to end up giving examples of us making profit. And the one thing that I really like to do is talk about my team, because we're a growing company, we're a growing community, and it's always good to be able to talk about how our people in the community are basically end up doing for us their overall gains, reaching their overall financial goals. I'm actually more proud about that than me actually making money inside of the market. So let's go through this. And if I were to ask you what your goal of trading would end up being, each and every one of y'all will end up saying this one statement in one way or another. It's to make money. But I want to break down that statement a little bit more, because what I think that you actually mean while just saying make money, you want to be able to spot out predictable positions to make money where you have low risk to high reward and win on those trades at a high percentage rate. Now, I think that's a better way of being able to say that I want to be able to make money. But here's the problem. When you're going through and you're looking at Forex trades in general, there are 6 major pairs to be able to look at and 28 pairs to be able to trade and to be able to choose from alone. So that means that we have to be able to simplify. I mean, because I know for myself, I'm a teacher by day, I'm a Forex trader by night. I have a company, I have 2 kids, I have a wife, I have other things that I have to be able to do instead of being in front of the charts. And I'm pretty sure you have the same things to be able to do. Now, what we have to do is be able to make the process to find more trading opportunities very simple and very to the point. All right. So what if I could tell you that what we've done is that we found the 5 most profitable positions in trading, and we trade those pairs each and every time that we end up going through. Now, it's ranked 1 to 5, and we're actually getting to that a little bit later on. But by being able to see what trading location that you're actually in, it allows you to be able to understand what trading style that you have to do and be able to trade that more consistently. Now, understand this. When I end up asking about your financial goals, everyone has some reason to be fearful. But think about this. Aside from not having money to start off with, people do not invest because they're in fear of losing money or the lack of having some type of education to back up with it. Now, keep this in mind. If you're not willing to educate yourself nor take high probability risks, how are you ever going to reach your financial goals? Now, I end up asking the question, what were your financial goals at the beginning? And I'm going to keep on asking that. I'm going to keep on building across that, because you have to understand this. You have to be able to take risks in order to be able to get where you want to go, bar none. If you wanted to learn how to be able to go be a doctor, you had to go to school to be able to learn how to be able to do that, right? If you wanted to be a basketball player or anybody that plays sports, you had to put in the time to be able to learn how to be able to do that and master that overall skill. Now, we're trying to learn, or in this case, you're trying to learn how to be able to generate income, right? Well, if you're not willing to educate yourself and to be able to take risks, how are you ever going to be able to do that? Okay, so let's break down our original statement that we end up saying that we wanted to be able to make money, right? We want to spot out predictable positions to make money where you have low risk to high reward. Well, let's go through that real quick. Anytime that we're looking at risk to reward in trading, I personally evaluate my performance after 10 trades, and I suggest that anyone that is getting started look at their 10 trades and go through that over and over and over again to see how well you actually end up doing. If you end up noting that your risk to reward is the same, meaning that if you lose $100 hypothetically, and if you win, you make $100 hypothetically, then you have a risk to reward of 1 to 1, which means that you need to win 6 out of 10 trades or 60% to be profitable. Now, if you end up doing it a little bit differently, and let's say, hey, you want to be able to say, I want to at least make double than what I'm actually making, then that means that you lose 100 hypothetically to win 200. If you do that, then that means that you can win 4 out of 10 trades to be profitable, or win at 40% of your rate after 10 trades and being able to evaluate it. Now, here's the cool thing. If your risk to reward is a 1 to 3 ratio, what that means that if you lose 100, and if you win 300, then that means that you can lose 7 times and still be profitable. Now, how powerful is that? All you got to do is win 3 times out of 10 or 30% of your trades to be profitable over time after your 10 trades keeps on going. Now, what does this mean? That means that if you're trying to go to a 1 to 2 ratio, or 1 to 2.5, or 1 to 3, you have to be able to find trading opportunities in areas that allow you to be able to have low risk, yet high reward, and that are proven to be able to win. Okay. Once you end up finding those, then you place yourself into a position to where you can be able to have high percentage trades. Now, high percentage trades are spotted out when people are trading against the long-term trend. Now, understand this. When you're trading in general, whether it's stocks, bonds, Forex, futures, options, or anything else like that, you are basically trading psychology. You are trading against people. You're trading against algorithms. You're trading against bots. So if you're able to spot out the overall trend of what it is, then what you're going to end up finding out is other people are basically trading a different way, or other people are trading in a opposite direction. But if you end up finding the long-term direction, if you end up trading with that direction of highest probability, you can be able to pounce on the people that end up making bad decisions. Understand this. If you want to buy, you have to be, in order to be able to make money in buying, there has to be somebody that's willing to sell. Now, it doesn't mean that that person that is selling is going to end up being wrong all the time. But what you want to be able to do is be right. And when you are right, you want to be big on your winnings when it comes down to that. But the way that we end up spotting out high percentage trades is that we use our ABCs of trading to target these overall areas. Now, let's go through an example of this. And I have this chart that you can be able to look at on the right-hand side. What we're going to end up talking about is just a uptrend and a downtrend. Now, ABCD uptrend consists of a AB rally, a retracement, and then after that extension after breaking the AB boundary. So let's go through this again. From A to B will end up being a rally, which means that someone end up buying at a low price, and then to be able to create a profit, they had to sell at a high price. Now, when a lot of people end up selling at a high price, the market ends up pushing down or making a correction or a retracement. Now, from that low price, as long as the market does not go beyond the A in the movement, then the market has a great chance of being able to go your way and be able to create a new high. So from the C to the D, that will end up being an extension, especially after it ends up breaking the B boundary or the resistance at this point in the uptrend. Now, in a downtrend, what ends up happening, what that consists of is a AB drop, then a retracement, and then an extension after breaking the actual support of that overall move. Now, let's take a look at this example again. In this case, someone end up selling at a high price. Once they end up selling at that high price, then they end up buying back at a low price to be able to create that profit. Now, from an A to B, that is considered a drop. Now, when a lot of people are basically buying in that position, that gives you an opportunity as long as as long as the market does not go beyond the actual A or the resistance at this point, which is creating the retracement. Once the market starts to U-turn and breaks the B support, now you have a C to D extension type of move. Now, in every market, you're going to end up seeing this over and over again. The market just doesn't go up or the market just doesn't go down. It goes in trends. So we're able to use this ABCD sequence to be able to spot out a lot of profitable trades. But let me ask you this question. Based off of the information that you just seen, which letter in the ABCD sequence is most important for entries? I'm going to pause for a second. If you want to go back and take a look at that last part, you can. But I'm going to end up asking you this. I'm just going to pause for one brief second. Now, if you end up guessing C, you will end up being correct. But why? If we understand from B to C, that will end up being that correction. If you end up figuring out what a C is, what you can be able to do is predict what a D extension is going to end up being. Now, the way that we end up figuring out what a D extension is going to end up being is by using Fibonacci ratios. Now, each retracement level has a high probability extension that it forecasts to before it ends up hitting that D extension and completing the actual move of the ABCD sequence. So let me summarize this up for you and make it very quick for you in mind. Anything that's in green for its retracements will extend out to the green extension, right? Anything that's in a yellow retracement will end up extending out to a gold extension. Anything that's in red for the retracement will end up extending out to a red extension. Now, by being able to understand that information, that is very powerful information to be able to say, when I end up finding that correction in overall movement, I already know what my actual take profit area is going to end up being, which allows me to be able to understand that if I have a high risk to high reward type of position, I can feel comfortable to stay in that position and allow that market to be able to swing. Let's take a look at example 1. Now, from this position, the market ended up rallying from 71.57 to 77.46, creating the AB boundary within that movement. Then the market ended up retracing down to the 61.8 level. Now, we consider that to be the golden rule. And if you want to learn a little bit more information, then that's what we end up talking about within our course and everything else like that. But that was at 73.82. Now, what happened is the market ended up extending out to the 1.618 level, and that was at 81.10 for the overall move. From this move alone to that move going up top was 728 pips, which means that Hypothetically, if we erase everything that you end up looking at and you end up buying at that C position, and you end up holding out on that, or you end up buying at that C position, you end up seeing that the market end up retracing to a green area. From retracing to a green area, we can automatically say that the market was going to extend up with confidence to the 1.618, our 4-step level. If you look at it, the market basically ended up hitting it to the pip, and then after that started to retrace down again. But for people that are really interested in being able to understand dollars and cents, let's break this down real quick. 728 pips that you end up doing one mini lot means that you end up making $728 just on this one move by clicking one button. Now, you had a little bit more money in your account, or you was a little bit more aggressive, and you end up doing it based off of one standard lot, which is $10 a pip, then you end up making $7,280. Now, I'm not really big into emojis, but when I end up looking at these two emojis, there are two different type of people that are inside of this room right now. And I want you to fully understand that, because I personally know this in general, because sometimes I'm actually both. If you're the person that's on the left that's looking at that money and understanding that, then you automatically are saying that, hey, I already know that this is something that I want to get into. It's something that I want to be able to learn. So you can go ahead and stop the video right now. You can go ahead and see what our actual package is and what we can be able to do to be able to help you make that $728 in the market. And we can go ahead and get your education started. But if you're like this person on the right-hand side, then that means that you're a skeptic, right? And when I first got started in trading about 5 years ago, I was actually this person on the right. I ended up saying this statement. The inner skeptic in me ended up saying that the money sounds good, but how do I find these trading opportunities consistently? Well, let's go through that. What we end up doing is we group all of our trading pairs into 5 different categories, and it's based off of the location of where the trading position is at that particular point. But by doing that, we can eliminate bad trades and only focus in on the good ones. And this also tells us what trading style that we can be able to use, and the style of trade that we can be able to use, so we can be able to get in safely and get out consistently with profits. Now, those groupings that we end up going through have a ranking from R1 to R5, and we end up getting into that inside of the course. But understand this, each and every one of these have a very good style of position and a very good way of being able to trade. Now, obviously, R1 is the best style of trading, but R5s give you great opportunities as well. So by being able to understand where you're at in the market and being able to understand what type of trade that you can be able to take, it allows you to be able to create profits. Let's take a look at an example. A R1 type of trade is a deep 61.8 retracement or deeper in the daily or weekly buy zone. And what that does is it gives you the lowest risk to highest reward on trades. So when we're going through, we're always trying to find R1 trades first. Now, if we can be able to find a group of R1 trades, then that means that we can be able to trade, we can be able to do life, we can be able to do whatever that we need to do and allow the market to be able to move inside of our position. Now, if we end up losing, then that means that we lose very little. But if we end up winning, then that means that we win a lot. Now, in a R2 position, what happens is that it basically starts going into the push zone, which means that the market is actually starting to begin on that U-turn. Now, these are pairs that are near or above the overbought and oversold zone for the overall B. Now, there are a lot of people that end up making a lot of money by being able to trade R2 type of positions. One, what it does is it gives you a little bit more confirmation that the U-turn is actually started, and it gives you still that chance of being able to have a low risk to high reward type of trade. Now, in a R3 type of trade, then that means that the market has moved past that resistance or support of that B boundary. And what this actually does is that it automatically solidifies that this market has made a decision on if it's going to end up being bullish or bearish. So what this does is it gives us a chance to be able to say, hey, we only want to trade this one direction, and we're going to trade that one direction until the D extension has been completed. The only downfall on this one is that we're not able to have that same risk yet reward, but what we end up doing is we have a system on how to be able to protect ourselves in a R3 type of trade. In an R4 type of trade, you end up seeing pairs react to consolidation and support or resistance. And overall, we understand this, especially if you have been trading for a while. And for people that have not been trading for a while, we will teach you this. In consolidation, you only want to be able to buy support. You only want to be able to sell at resistance. So we look at this one, we can consistently see that the market end up having a boundary of 73.80 to 76.20. This is actually based off of the Canadian Swiss franc, and it had a 240 pip range. So if we could be able to get it as near to the support or as near to the resistance, then that meant that we were going to end up being in profit. If you notice, this happened a few times within this overall move. Now, in an R5 type of trade, this is a pair that ends up completing the D extension, and what it does is it allows us to be able to trade against the actual overall move that it ends up happening. So if we end up saying that we was in an uptrend and that uptrend has completed, we know automatically that the market is going to end up slowly turning around to create that new ABCD sequence. So by being able to trade and being able to trade to a safe haven position, then it allows us to be able to make profit even when the market is going away from the overall direction of long-term trading. So with that being said, let's go back to the inner skeptic, because the people that end up looking at that end up understanding, hey, this could be a great opportunity to be able to trade. But even the inner skeptic in me, when I first got started trading, said that these diagrams look good, but show me where you made money. Well, let's go ahead and go through some of these examples. And these examples that we end up going through in trading, today is March 14th. I'm only going to end up talking about trades that were very close and are very near. We actually ended up getting done. We had a very good week last week, especially with what's going on with the market and the huge volatility. What it does is give you a lot of huge swings to be able to go inside of the market. So let's take a look at the Australian dollar, United States dollar. We ended up selling this on March 9th and on March 11th. It gave us two opportunities to be able to sell. In this case, this trade was a R3 type of trade to be able to get in at this particular point. What we ended up doing was we actually ended up selling that position, and we ended up saying that we wanted to go even before the D extension actually ended up being hit. What we ended up doing was making 252 pips based off of both trades, and I personally ended up making $126 and 10 cents based off of that in profit. Now, we end up having some people in our community that actually end up making over $252 and a little bit more because of their overall account size and being able to do that. But understand this, that's 252 pips of overall movement that you end up doing just by clicking a button twice. Now, let's take a look at another example. We end up getting another one on February 27th, where we actually end up making 27 pips off of this one. Now, if you understand this, we actually end up making a $45 profit off of this move. Now, based off our system, we can see that the market actually started to turn around, and based off of the overall move and based off of the way that it ended up moving, we actually ended up leaving off something on the table. But we understood that we could be able to get this at a higher position. And when that drop actually ended up happening right there, some of my people inside of our community actually ended up catching on to that drop. I was just not one of those people that was able to, but the D extension actually ended up getting hit, which was 374 pips for the overall move within that actual position. It was a great trade for a lot of people inside of our community. Now, one of the pairs that we're actually in right now that I'm very excited to be able to talk about, and this is one of those R1 types of trades, so I'm going to go ahead and explain it a little bit, is the Euro versus United States dollar. What we end up doing, we actually end up spotting this trade out because we was trying to get into it when it ended up hitting the D extension, creating an R5, but we was not able to because the market ended up shooting up so much. But because of that volatility and because it ended up moving up to that higher position, it gave us an opportunity to be able to have a low risk to high reward trade. And I know that you're looking at this and you can say risk of 539 and risk of 415 and risk of 234, but understand this. It has 1,350 pips of overall projection. And as soon as we end up selling within that 618, we actually end up seeing the market start to go down in our overall position. Now, when I end up taking this photo, we was up 268 pips on this overall move. Now, a day after that and being able to look at where we actually were, We're up almost 350 pips on this overall move, and we still think there's 1,000 more pips to be able to go within this move. This is something that can be able to change a lot of people's lives on being able to spot out directions that spot out positions that give you that opportunity to be able to make a trade and actually be able to do the things that you want to do and allow the market to be able to go from there. So I'm going to ask you this question real quick, and I'm going to go back on these previous slides. I'm going to ask you again, what are your financial goals, right? What are your financial goals? Could you use an extra $1,350? Could you use an extra $45? Could you use an extra $126? What if you were to win on all of these trades and even more that we actually end up talking about inside of our actual course, going through and breaking down some of these different positions? What could you be able to do with that? Would that pay off some bills? Would that be able to add some extra funding so you can be able to pay off any type of debt or anything else like that? Or what if you can be able to reinvest and be able to add on more to the trades and be able to make more boom on the trades that you end up doing very well in? Now, with that being said, based off of what you just seen here, are you willing to bet on yourself Forex trading? If you are, typing yes. Make sure that you end up writing your name, and we'll go ahead and talk to you. We can go ahead and move on. We can go ahead and get your education started right now. Because I want to be able to make sure that I'm helping out people that are looking at something or trying to do something different and want to be able to use this in a way to be able to achieve your overall financial goals. If you're not at this particular point, my question to you is, why not at this particular point? I understand that there are a lot of people that are going to end up being skeptics, and I understand there are a lot of people that are going to get started with us tonight or get started when you end up seeing this video. But the time is now to be able to start investing. When the market is fearful, when people are actually afraid, this is the time where you end up stepping up and being able to make moves. We can see this in past history and everything else that has shown us if you end up not being fearful in the time where people are being fearful and actually end up stepping up to the plate and taking a risk, you can end up knocking it out of the park. If you look at 2008 with the housing crisis, where people end up buying up houses left and right in 2008, you end up seeing that they actually end up turning into future millionaires and billionaires based off of that movement. Now, I know some people are actually looking at being able to do this and being able to turn yourself into a millionaire or billionaire. Well, what if you can be able to make an extra $400 each and every month? What would that do for you? Now, let's talk about our Fibonacci Fundamentals Master Class. What you're going to end up learning is how to accurately plot Fibonacci retracements and extensions on charts to determine the trading zone and style of trading that is necessary to safely maximize profits while minimizing losses. And we're going to end up doing that in our overall style of trading and our way of being able to do it. Now, with that being said, what you'll end up receiving in this overall package is a breakdown of our strategy. Now, that comes in a PDF form and it comes in an actual video form. So if you're more of a visual person, you'll probably end up looking at the videos a little bit more. If you're a person that likes to read, then you'll probably end up looking at the PDFs and being able to learn from there. But I urge you to be able to use both as a way to be able to speed up your overall learning process. Now, you'll also get a copy of our ranking system, and kind of like what we end up talking right here, we actually end up breaking that down to the T on how to be able to trade it, what trading style actually works with that, and what we end up doing for being able to manage trades while they're actually going through its overall swing. You end up receiving 2 months of ongoing mentorship where you'll end up trading with me live or one of our customer representatives live, where we end up looking at and spotting out opportunities in the market and putting you in position to where you can be able to stay away from certain type of trades based off of whether if it's economic news or anything else like that. And we teach you a systematic way on how to be able to trade, which allows you to be able to save time, but be able to go through and be able to maximize profits. And then after that, you end up getting discount on future projects. And for this one, I'm going to be honest with you. This one is actually getting ready to start wrapping up because what we're going to end up offering is our Synergy automated system. Now, this is something that's going to end up coming out in about 5 or 6 days. So if you're able to be able to jump out on this and be able to get a demo of this, then what you end up receiving is a fully optimized set file. Now, this fully optimized set file that we end up running and basically end up starting off with Started off with $1,000 on a Euro US account, and then after that turned that into $3,000 over the course of a year. So that means that it not only did it double once, it doubled twice. And all you had to do was just click on the button, click on auto trade, and just let it run. Now, tell me about this. How much freedom would you have and how much confidence would you have in yourself if you end up knowing that you had a weapon like that to where all you had to do was just click on auto trade and allow it to be able to do its thing? And it's being managed by us. So if there's any type of updates or anything else that ends up going wrong, we can be able to send a copy or a new updated file, and you'll always be able to have that. Now, I think that's very powerful for a person that wants to be able to learn how to trade the Fibonacci way for the fundamentals and still be able to have an automated system, because it allows you to be able to be two people at once and trade at that time to be able to double up your account. Now, with that being said, all of the stuff that we end up talking about for the overall package, the mentorship, the books and everything else that ends up going along with it has a $799 value. But for a limited time offer, what we're going to end up doing is offering this for $499. And this is why seats are still available. We have people that are grabbing up seats left and right for this overall class. My overall goal is to be able to have 30 people in our next session for this overall class. And once those 30 people end up hitting, then that means that we're it. That means that it's it. That means that we end up moving on. And I can't promise you that I can be able to offer this at that $499 value the next time that I end up posting this up. Now, if you're interested in being able to get the demo of the Synergy Auto, that will end up being a $799 value. But understand this, I literally feel like I'm actually giving this away when it comes down to this overall value, because $499 for 2 months of overall mentorship and everything else like that is basically $250. And I believe that's an actual steal on what you end up doing. If you look previously based off of the information that you end up seeing before, you basically just paid off everything. You basically just paid off everything in the course of 3 days based off of the trading that we just did. Now, like I said, I feel like I'm actually end up giving this away, but I really want to be able to build a community that's going to end up allowing yourself to be able to create passive income and know that you can actually have some type of resistance against any type of major thing that's going to end up happening in the market that's going to affect your overall active work. All right. Now, I'm going to ask you these 2 questions, and this is based off of what type of person that you're going to end up being. We got a lot of people that's in here that's looking at this video at this particular time. We have a lot of people that's going to look at this video in the future, and I'm going to ask you, who are you in this case? Are you going to be the next person that's going to end up taking advantage of this opportunity? Or are you going to be the next person that's going to end up finding a way to make an excuse of why you don't deserve to make extra money? Don't be the second person. You deserve to be able to make this money. You deserve to be able to figure out ways to be able to create passive income. Take advantage of the opportunity, because you don't ever know when this opportunity may end up showing up again. Or if you don't end up having a skill like this on being able to understand how you can be able to make money without having to work for someone, and all you have to do is just be able to scan a chart maybe 90 minutes a day to be able to look at the overall pairs and be able to make an extra $100, $200, $500 of overall income, I think that you're losing out on the overall opportunity. Now, let's talk about our actual community. Let's talk about the people that we have. Our Card Academy group is growing up strong. We actually end up having 140 people at this point. We actually end up creating a group, I want to say right around 6 months ago. And these are people that are looking to be able to trade, looking to be able to learn. We're doing a lot of fellowship. We're actually going through with free webinars and everything else like that to be able to talk about certain positions like this one. And what we actually end up doing inside of our session was that we actually end up scanning the market. And I was somewhat skeptical on this position, because I actually thought that we can be able to get into it a little bit earlier. But we end up seeing that the market ended up rejecting and giving us an R3 type of trade. And we end up buying this on February 24th. And what it ended up doing was it ended up making our team 112 pips just based off of the D extension. Now, if you notice, the market ended up jumping up almost 400 pips for its overall move. And now it's in an R5 position again. And we're looking at being able to sell at this position as we speak to be able to make more based off of the teachings that we end up talking about in this overall course. But here's the engagement that I end up seeing, and this is something that I end up liking. And I don't know what happened to this middle picture, but the things that they end up saying. We end up saying that we're looking at the pound US dollar trade, and we end up saying that we was up 73 pips based off of that overall move, and we were going after 121 pips on the US CAD. We actually end up hitting that pip, hitting it to the pip at 112 pips. And then, I mean, I love being able to look at these reactions. We end up talking about the Euro US trade on this one, where we end up saying that we was up 250 pips and counting. And I wish I could have showed you the text message that I ended up showing him when we was up 300 pips, and how well he ended up saying that we actually ended up doing based off of that overall message. I want you to be the next person to receive a message like this. Once again, you deserve to be able to make the money that you actually end up working for, as long as you end up putting the work in. Now, last month, this is our overall trading for us. Our group that ended up getting started with us last month ended up making 793 pips in February. Now, for the people that are skeptics no more, I don't think that you should be skeptics no more. I believe that you should be a person that should say, hey, this is for me. I'm going to do everything that I can be able to do to be able to learn it. I want you to be the next person to see this in your overall account. Now, I'm going to go back to this because I ended up saying this before. It's a $799 value, and it's actually worth even more than that. And we're selling it for a limited time for $499. And you look based off of the things that the community end up doing, based off of what we end up doing just off of trading alone, this paid for this 2 to 3 times already. Now, while seats are still available, your purchase link is down here at the bottom. You can go to cartercowcapital.com/Fibonacci Fundamentals and be able to go inside of it and get to that link and be able to purchase it from there. If you have any more questions, you can actually be able to email me or be able to connect with us on our overall links on Facebook, Twitter, YouTube, and Instagram. Or you can just email me at cartercowcapital@gmail.com to be able to go from there. Once again, our purchase link is cartercowcapital.com/Fibonacci Fundamentals to be able to go through this. I don't want you to be able to waste an opportunity to be able to create income when people are actually being afraid. I urge you to be able to take advantage of times like this where people are doubtful about what's happening, which means that they're going to end up not taking the risk and taking the chance that they actually should be able to take. Now, I do appreciate your time for being able to sit with me. We actually end up getting this done in about 36 minutes for the overall time. But like always, what I end up saying is plan your trade and trade your plan. I see you in the classroom for the people that just got started with us, and I see everybody else in the next videos that we end up getting started. Y'all have a good one.